Woo! Welcome to CoinMarketCap. This is precision trading. I'm still that guy, Jay Sharp. We got the markets trying to break through resistance and make and create some new all-time highs. Is it possible? Or will the bears take over and stop this charge and put pressure on the bulls? In this episode, we're going to talk about recognizing failed setups. Have you ever been in a situation where you see this great setup, you're going to get into this trade, or you got into this trade, and it does the opposite of what you expected? Well, in this episode, like I said, we're going to talk about failed setups and how we could possibly take advantage of that. Failed setups, what do they look like, and how do we recognize them? Now, there are some things to consider when trading a failed pattern. One, has there been new demand or supply been created through a length of time? The depth or the movement into the prior bar or bars against the trend. Those are the kind of keys that we're going to look at in order to determine how to trade a failed setup. Now let's go to our favorite spot, our favorite place. You know the one, CoinMarketCap. As an example, we're going to take a quick look at Bitcoin and see a failed setup. We can see three bars coming up here. This is October 1st. We have a sell setup. We have prices moving into the moving average or just above it. And then we have a slowing of momentum. We have one red bar after the three green bars. And then we have another green bar. Now, if you were a short seller and you wanted to go short, this would be a great setup to go short because you have a sell setup. Three bars going up, we have a slowing of momentum. Now, if I was gonna go short this, I have a 3-bar rule. If the bars don't do what I expect in 3 bars, I'll either sell half or get out of the trade. So as you can see right here, we have 3 bars and the market isn't doing what I'm expecting it to do on the 3rd bar. So by the 3rd bar or the 4th bar, I'm either getting out or reversing my trade. And as you can see here, prices did actually fall down on this day, but then reversed with a bottoming tail, suggesting prices are moving up. And notice the prior 3 bars, the depth and width in which it went into the prior bars, it totally engulfed the previous 3 bars, suggesting that momentum wants to keep moving up. Now looking at the 4-hour chart, we can see that prices they consolidated for a bit and then tried to explode upwards and then failed and fell down to the 20 moving average. So we have the moving averages here supporting prices. On the 4-hour chart, you can see there's 3 bars, actually 4. On the 4th bar, there was a narrow range bar. After that narrow range bar, we had a wide range bar taking out the previous bars, suggesting that prices wanted to keep moving up. And after that narrow range bar, we have a consolidation of slowing of momentum of narrow range bars, and then another move upward, creating a sell setup on the 4-hour chart. But notice after 3 bars, prices continue moving up with a wide range bar. One of the other things I want to bring to your attention is what I like to call the fake out or the shakeout. And that is when prices give you the impression that the market's going to continue in the expected direction that you expect. But then the market turns around on you. A good example is that is Bitcoin on April 12th. We have a consolidation of prices right here, moving up on the moving average, and prices break out with a wide range bar. Now that wide range bar gives you the expectation that price is going to continue up. And even when it does this narrow range bar, you still have the expectation that price is going to continue up. However, the third day is another narrow range bar and then a collapse of prices ensue, faking you out, thinking that, oh, I'm going long, and then prices turn around on you. That's another thing that we need to be aware of. We can use failed patterns, fake outs, to our advantage. Let's take a look at what's happening in real time in the markets and see if there's any tools that we can use either today or in the previous weeks to our advantage. We can see that Bitcoin is pumped into a point of resistance right here at that 63K line, and it needs to break through the 64.8K line. We can see that prices have moved into resistance with a wide range bar, and the next day is a red narrow body. And the third bar is actually a bottoming tail, giving us the expectations or confidence that this may be a failed pattern on the day chart here. Let's go into the 4-hour chart, and we can see there was a wide range body with a bottoming tail right down to the 40 moving average. And even going on to a smaller time frame, into the 1 hour, we can see that we have a buy setup and prices moving back up, giving us even more confidence that prices may be doing a failed pattern here. Now let's take a quick look at Ethereum and see how that's doing. We can see here on the day chart, prices coming up to resistance right here at that 4,000 mark and change. We have actually a sell setup. Prices dropping down here on that third bar, making a bottoming tail. This is a strong possible failed signal. If prices fail here, we can see prices blast through that 4,000 mark, continuing up. Well, gang, there it is. Another tool that we can use to help us get into trades or even to get out of trades. Now, things are looking bullish for Bitcoin and for Ethereum, but I wouldn't pop the champagne bottles yet. We do have that Bitcoin ETF that's helped us bring prices up and keep things bullish. However, do keep in mind that anytime big industry like the stock market gets involved with crypto, we've always seen some kind of pullback. Last time in 2017, December 17th, when Bitcoin got into futures trading, we saw, well, actually, that was the beginning of the bear market. Eesh. And I don't forget that because I was a part of that, and that hurt. And also remember when CoinMarketCap, I think April 12th to 14th, when that came in, we had a big pullback in the markets. And now we have this ETF coming, and they should start trading this week. So don't be surprised to see some kind of pullback or some kind of struggle to break through those lines of resistance. Now, it's not financial advice, but it is financial caution that I just spewed there. But once again, I got to thank you guys for joining me here at CoinMarketCap in this episode of Precision Trading, where we talked about those failed patterns and how we can use them to our advantage. Once again, I'm going to leave it in your hands to tell as many people about this great world of cryptocurrency and how life-changing it actually can be. And also, don't forget to tell your friends, your family members to subscribe here at CoinMarketCap. And if you have any other questions about cryptocurrency, don't forget to ask Alex. The link is listed down below. So this is Jay Sharp, once again signing out. It's love, peace, and hair grease. Deuces. Until next time.